Welcome to Shareholders of a Better World, brought to you by TBLI Group. At TBLI Group, we have an established reputation as an organization dedicated to building the ecosystem of global sustainability and impact investing. We're doing this through educating, advising, and facilitating transactions in global sustainability and impact business, as well as capital solutions for private companies, family offices, and fund groups. For nearly 25 years, TBLI Group has created a vertically integrated ecosystem of education to action through TBLI conferences and TBLI consulting. More about our company can be found at tbligroup.com. This webinar is brought to you by TBLI Foundation, which hosts educational learning experiences dedicated to a better planet. Through the foundation, we build sustainable communities by sharing the people and the experiences making a difference to so many of our lives around the world. Our weekly podcasts bring impact thought leaders that are doing and not only chatting. Now let me introduce my guest today. Good afternoon, everyone. I want to thank you all for coming to the TBLI webinar. And we are very honored to have Stephen Brenninkmeijer, who is a private investor and for 30 years has been involved in family-held retail business, CNA, in USA, Japan, England, and throughout Europe. He's been active as a strategic investing since 2002 in the impact space. He's chairman of the supervisory board of the European Climate Foundation, member of the board of directors of World Resource Institute, board member of Responsibility, and many others. Before Stephen starts, just some housekeeping. For those of you that want to pose any questions, please do it in the question area under the screen, not in the chat area. And please introduce yourself in the chat area. Welcome, Catherine from Zurich, Jan from Ord, from the Netherlands, Ava from Singapore, Mariella Benvenuti from Italy, Glenn from Berlin, Maurits Groen from the Netherlands, Cesar from Zurich, and too many people to list. So I want to thank you all for coming. We're very honored that Stephen has found the time to join us and share his experiences. Stephen, tell us a little bit about who you are for those that don't know who you are and what you do.
Yes, thank you, Robert, and I'm pleased being here this afternoon in sunny Surrey and in lockdown since 3.5 weeks. But obviously, as the weather is so pleasant, it's actually the lockdown is actually not very unpleasant. And I'm Stephen Brenninkmeijer. I'm an impact investor, and since, as Robert said, since 2002, and have been learning impact investment after having left retail as a business where I learned the trade of business in general. And but in impact investment, obviously, it's a different industry. In those days, we didn't call it impact investment. We called it social investment, a little bit coming out of venture philanthropy, etc. And but I really enjoy doing what I do. You learn a lot from the mistakes you do. You learn a lot from the amazing people you meet, the organizations that you can help to grow, the organizations that don't make it, because you also learn from those mistakes and why are these things happening. But it's a very exciting time, and obviously things are moving dramatically in that space in the last 7 years. When we started in 2002, obviously I helped to create a company called Responsibility, and after the first year, I think we had an asset base of 8 million, and our board was larger. We had many more people on the board than people in the organization, and which is quite typical for startups. But obviously, I served 14 years on the board of Responsibility of the top structure, and when I left, we had an asset base of 3.2 billion. So it was a very successful a couple of years, and I've since joined also within responsibility a company called Participations, which is their private equity arm, and I'm on their board since last 2 years, and which again is also very enjoyable. I live in London or outside of London in Surrey already since 1987, and I'm planning to stay here even after Brexit, which obviously is a emotional disaster, not only for the UK, but also for the total European activities, etc. But okay, we can't change it. But now with this coronavirus situation, I have the feeling that the whole process will be slowed down before this crisis has been fully managed. Robert? Can't hear me.
Can you? Yeah. Okay. You started in 2002 with one of the first impact vehicles in Europe, for sure. And in 2004, you organized a kind of European summit on getting into investment allocators to commit to impact. That was very, very, very early. I mean, what was the trigger for seeing that entire potential of using money and integrating purpose with investment?
I think the trigger was very much coming out of this philanthropic industry. Obviously, we as a family are doing a lot of very good, important philanthropic work. And I always felt that there must be something more than just, let's say, in simple terms, giving money away. And so that concept of venture philanthropy was something that I got interested in. And then I met the people who were starting responsibility, and we had many discussions about this. And then we felt, okay, the initial play in responsibility was microfinance. And so we felt this is a good way of engaging with the emerging markets, with people who are starting and working in their own small businesses. And but then instead of giving them grants and supporting them through grants, etc., but to giving them loans. And what we learned very quickly is that people who received loans from us felt much more empowered than just receiving grants, because to receive a loan and you have to pay back the loan and you have to generate the interest that you can pay as well. So that made them feel, in that sense, much more important. And I think that is something we wanted to expose when we had this seminar, this conference in Amsterdam in 2004, to give, let's say, a larger group of, let's say, interested parties an idea of the possibilities that this type of investing would bring in the future. And obviously, it was early days, 2004, and we all engaged, raised capital through private means. Obviously, the large DFIs like FMO, KfW, all these organizations used taxpayers' money to do actually what we were trying to do, but then with private capital. And I think, I think we were proven right, because obviously the market has grown in the last 15 years, and I think there's now a lot of private capital available for these type of investments.
And you've also, you're part of the Anthos family office, and Anthos has allocated quite a lot of money through a vehicle for impact investing. And I also have tried many times trying to get family offices engaged on the impact space. What have you, I mean, you were able to get people on board as within your own family office, but you probably have a lot of family offices speaking to you. What did you find the most effective way to get family offices to embrace the whole issue of impact investing?
I think was important that you can tell a good story, that you can tell a story of how one starts this, what are the successes, what are the failures, and that you also have to make sure that people understand that it's not always the size that matters, because people often think that you really have to take 50 million in the hand, otherwise you can't do it. And obviously, no, that is not the case. It is, I think, I always advise people to start small, to work with strategic partners. Don't go alone. Don't go it alone. Look at co-investors who has invested in that particular organization, and talk to them. Who has not invested is also important to understand reasons why people don't invest in certain activities, and find out why. And obviously, then also understanding that the teams that are engaging in these organizations should be, trustworthy, should be believable, should understand what their, let's say, business can achieve. And I always found it more encouraging when you meet people like Johannes Weber from Ananda Ventures in Munich, and also Klaus Tischhauser from Responsibility in Zurich, who were actually underselling their prospects, and not overselling, just underselling, but then overperforming. And that is often the case, that you meet people who are trying to oversell you something, and then will never reach it. So I think that is something not necessarily has to specific with impact investing, as I think with any type of investment. But I think through that type of, if you can tell a believable story to family offices, then I think it's more likely that they start looking at it and trying it out. And I think it is just trying it out and learning with people who've done it, and learning from experience, and then go the first mile and see how it goes.
And from you've had probably lots of companies pitching to you, and funds. There's probably people over here trying to pitch through the chat session. What has been your most rewarding, maybe not always financially, but spiritually, investment, or one that you was maybe disappointing? It didn't achieve the financial, but it did have maybe a high spiritual or a social performance. Maybe share some of the deals that you said that, oh, I really like that one, but maybe it didn't work out financially, or maybe what you thought might not work out financially worked out very well.
I would like to talk about two investments. One obviously is Responsibility. We mentioned that already. And I think what they're currently engaging in is establishing an emergency liquidity facility with the purpose to support small enterprises in developing countries who are directly affected by COVID-19. They're raising between 300 million and 1 billion in the next 8 weeks. And I think that to date they have commitments of 250 million plus. And they obviously have a network of 12 offices around the world. So they're best placed of, let's say, dispersing a facility of that sort within the next 8 weeks. So they want to start to disperse from May onwards. And because obviously the pandemic is also reaching their markets very much. And I think to be able to create a liquidity facility of that size, which is basically, again, privately funded, and they're looking at private investors, they're looking at philanthropic investors, they're looking at pension funds, etc. And I'm pretty sure they're going to get it. And I think it's going to be remarkable. And so I think I'm very proud that company is doing this type of amazing work. The other company I just want to mention briefly is a company called Orticon. I earlier mentioned Ananda Ventures in Munich, and I'm an early investor in their fund since 2009. And one of their first investments was this company, IT consulting firm called Orticon. In those days based in Berlin, but then moved over to Munich. And Orticon is now the largest IT consulting firms in the world, with over 200 IT consultants who are all on the spectrum. They all have autism. And
Wow.
2 years ago, we bought a business in the US, in Santa Monica, called MindSpark. And there was just last week was an article on CNBC about how people with autism are reacting to working from home in the way that they are so well suited, taking their skills outside of the office and working from home, and they don't lose any productivity at all. And the clients in the US, in Los Angeles, in Columbus, Ohio, and Salt Lake City, where Orticon at this moment is based, are so impressed with the productivity and the efficiency of the Orticon consultants who are just motoring away. And what they do, obviously, they excel at business intelligence, quality assurance, test automation, and complex software development projects. So I think here's a business, it's a typical social enterprise where they created a working opportunity, employment opportunity for people with disabilities. In most countries, these people are disabled. And so if they can't find a job, then they're put into these workplaces where they potentially put very set to work in very simple tasks, etc. And I'm very proud of what they have achieved. We've got 5 offices in Germany. We've got 1 office in Zurich, 2 offices in the UK, 1 in London and 1 in Edinburgh, because Royal Bank of Scotland wanted us to come up there, because I think we've got about 15 consultants with RBS. We've got 2 offices in France, 1 in Paris and 1 in Toulouse. Why Toulouse? Because Airbus wanted us to be there. So it shows the quality and the draw that this type of business has. And it's totally privately funded, and it's amazing. And I think even in this type of lockdown, a company of that sort is able to continue and to stay afloat, which is, I think, very important.
So just to kind of recap, in 2002, you were kind of ahead of the curve on the impact space, and now you've become chairman of the European Climate Foundation. So an even bigger challenge than just getting family offices to invest in the impact space. The price of oil, of American crude, has gone minus, which do you find that frightening for the challenge of climate change, which when oil at least in the US is minus, so that they'll pay you to take it away? Doesn't that worry you and concern you as you're trying to get to a low to zero carbon world?
I think the fluctuations in that market is obviously is a very dangerous, let's say, consequence of where we are. And if you know that on the west coast of Scotland, 80 oil tankers are idling there, and because they don't have any storage facilities for all the oil they're carrying. And so oil is now being stored on oil tankers. And obviously, we also see that the share prices of the big fossil fuel companies are dropping massively. So that will have an impact on pension funds and institutional investors, etc. On the other hand, what we feel is that obviously renewable energy organizations will find that they find new capital coming into them, because obviously investors will try to move, and they all understand that we have to come to a carbon neutral world by 2050. So I think the loss that fossil fuel companies suffer at this moment is the gain of renewable energy companies. And so in the short to medium term, obviously it's a worry. But I think in the long term, we see this as a positive, potentially a positive move. And
And
so
the
we
work
have,
that you sorry, the
sorry.
work that you do with the European Climate Foundation is mainly in trying to change policy or to direct investments.
Now, we work on many different ways. We do a lot of advocacy. So we work closely with the EU, with Timmermans' cabinet, and also with Mrs. von der Leyen and others. We work with the different governments around Europe, and with the French government, with the UK government. Obviously, we were very active in helping preparing the COP26, which was supposed to take place in November in Glasgow, but is now moved to most probably to the early spring next year. And so we work across Europe. We have close contacts in Rome with those government representatives, but also with the Vatican. We feel that the Vatican is very important in that debate, and we work very closely with them on different projects. And the same in Madrid, in Spain. And so we work on different levels. We work with industry, with the automobile sector. We work with the big utility companies. One of our key aims is by 2030 to phase out coal out of Europe. And obviously that is a massive challenge. Okay, some countries, like for instance Greece, have announced that they will close their last coal-fired power plants by 2028. The UK will stop coal plants by 2025. So there's some green shoots, but obviously Germany has so far decided in their debate in the Coal Commission that they would phase out coal by 2038. We are also involved in the Coal Commission, and obviously we are not happy with that compromise. And so we're still working very much with people, good partners of ours, Client Earth and others, to move the needle in Germany to actually come closer to 2030. I think the commercial argument is obviously that these energy companies have a big problem in regards of coal, because obviously renewable energy is so much cheaper now than fossil fuel energy. And that will stay that way. It's not because of coronavirus that suddenly it will change. Okay, in the short term, maybe because oil is now so cheap and that will have impact on gas, etc. But eventually the direction is clear, and that should change. So in that sense, we have a whole portfolio of different activities that we work with. We are now also looking very much on the food and land use debate, because obviously land use, agriculture, etc., is obviously a massive greenhouse gas emission, let's say, emitter, and which most people are not aware. But I think we are very much talking about sustainable farming and sustainable foods, etc. So there's a whole area that we are now starting to concentrate on. And in that sense, the work doesn't stop. And I'm very passionate about this work, because I think it's, if you look at impact investing, obviously a lot has achieved in the last 15 years. But in the climate debate, the impact is potentially much larger. And as Mark Carney said in his article in The Economist of last week, where he describes the war against an invisible enemy, if that is over, our ambitions should be bolder, nothing less than to make a fit planet for our grandchildren to live on. So we have to make sure that this planet is fit for us to survive on. As David Attenborough said as well many times, the planet will survive. The question is, will we?
Are you optimistic or pessimistic in the short term?
I think in the short term, I must say, looking at environmental health, in the last 4 weeks, we all experience that the environment has come back in full bloom. We can hear the birds. We don't hear the planes. And it is just amazing how the environment is so resilient and can actually, let's say, rebuild itself so fast. And where I'm optimistic is that I think the populations in our big cities, but also in the rural areas, will see because this lockdown has brought some very positive sides, that suddenly we experience the environment, nature in a new way. And I don't think that we want to go back to the old ways of doing things. I think we would want to try to preserve what we have seen and what we have achieved in the last month. And so in that sense, I'm quite optimistic that the basic attitude of people is changing. And I'm critical in regards of what happens if, let's say, the big boys are going back into business. I had a discussion with a gentleman from the Cabinet Office last week, Charlie Ogilvie, and I said to him, we are very concerned that if the governments are giving bailouts to the big boys who eventually will restart their business, probably much faster than we would expect, and then focusing very much on profit maximization and not on environmental issues, because they want to get shareholder values back where they should be, etc. And I said, we are worried that governments, if they start giving bailouts to these organizations like airlines, etc., if they do this without strings attached, I think this can't be right, and we can't support this. And he agreed. He said, this is exactly our discussions we're having with the Treasury, to make sure that we define very clearly what are the strings attached if they give bailouts to airlines, industries, etc. So we have to make sure that these organizations are adhering to the regulations that we have defined in the Paris Agreement in 2015, and that we want to, let's say, make even stronger next year at COP26.
We're being a bit inundated here with questions from the audience, so I'm going to start taking some of these questions. Heinrich had a question of, how has impact investing changed since 2002 in the dimensions of industries, target countries, and deal size that you have seen?
Obviously, impact investment became much more professional, because in the beginning it was very much people got involved and tried to make ends meet, but you saw that not always organizations could afford recruiting A people. Very often you came across with people B or C type of people. But this has changed remarkably after the financial crisis. Then you saw definitely that let's say impact investment funds, etc., have really have been able to recruit top quality people from the investor world, but also from other industries, and that obviously has an effect that obviously the efficiency and the productivity and the outcomes became much more important and were much better achieved. If I look at responsibility in the way that we recruited people in the early 2003, 4, 5, and the people we recruit now, obviously there you see a marked difference. But people who had, let's say, came out of the financial crisis, that was a marked change, because people understood that running a business only for profit maximization was not the way forward. People were looking for companies with a strong purpose in regards of the environment, purpose in regards of social aspects, etc. And I think that has markedly changed the industry. Also, the deal size has increased, and obviously now a good deal. Yeah, okay, it depends on what is a good deal, but obviously each startup obviously needs small monies. But okay, once you invest in growth capital, then obviously your deal size starts going up. And obviously you see some of the big banks like JP Morgan, etc., and who all have launched impact funds, and obviously that has an impact, has a consequence in the industry, and you see it becomes much more a not yet mainstream, but it's getting there. So I'll see probably the next 5 years, impact investment becomes very much mainstream.
And what is the number one criteria that you look at favorably when you're analyzing an impact investment? What can be, where should people be focusing if they want to get you to interested?
Yeah, I always see you have to find something where the organization can really make an impact, create a difference, is scalable, and is also easily understood. So coming back to, for instance, Orticon, it's a business. When I first invested into this, I wasn't quite sure how scalable it is. But then when you meet some of these consultants who are so passionate about their work, and then you understand, if you put them into the right scenario, right structure, together with we employ job coaches who are psychologists who actually are having once every 2 weeks a session with each consultant individually, and then also go into the workspace with the consultant and also talk to their co-workers and to their line managers. And then you suddenly see this thing really can work. So it's scalable. And but it took a while. So and you have to believe in the management that they can actually execute what they're planning to do, that you give them the reins, but you also have to make sure that these organizations have a sound governance structure. And that is very often that's a challenge to a small medium enterprise to put in a strong board, and maybe even an advisory board, etc. And because you don't want to overwork the management, that they have to suddenly serve all these people who are sort of advising on what have you, and that can be a challenge. But I think that is for me, these are the criteria. And yeah, as I said earlier before, yeah, who else has invested? With whom are they strategically aligned? And then you can work and understand from them how they feel.
I know that you're a big fan of Africa and you've traveled there extensively. There's a question here from Michael regarding channeling and activate impact investments in especially in Africa. And he's asking, is blended finance with the DFIs a solution, or is there space for more standalone projects to get those types of investments?
I think Africa is a very complex country. It's a wonderful country, but it has a lot of political, social issues. One of the biggest things in Africa is corruption, and which we are facing every day in the work that Responsibility and others do in those markets. And you have to be very clear how to handle that. Responsibility, we've got an office in Nairobi, and we have our Responsibility Renewable Energy Fund structured there. I think at this moment the asset base is about 500 million, and we are building together with DFIs, KfW and others. We are building hydropower plants, so using small rivers and installing generators and things into these rivers, and then generating electricity for the local communities. And obviously it's relatively small, but it's very powerful. You know, if you can generate, let's say, 6 to 8 megawatts from one small hydropower plant, that's amazing. You can really serve quite a large area. Obviously, you can't compare these to these turbines that are standing in the North Sea. That one turbine produces 16 megawatts. But obviously, we think what we do there is very important. So we see this very much as an impact investment story. Obviously, there are many other players in the African markets, and I'm inundated probably every month with a couple of funds who want me to invest into the African scenario, etc. But I say I'm working with Responsibility. They have a track record, and so for me that is at this moment okay. But there are a lot of other good players. One of my organizations, Pimwimic, based in Amsterdam. We have got a couple of good investments in Africa, which we do directly through our office in Amsterdam, and which is working well. And we can say, oh, this is small, it's not as big as Responsibility, but okay, you have to start small in order to grow. And I think that it's a very promising work that Pimwimic does in those regions.
This is a simple question. How do you spell Orticon, the company that you invested in? Because they have different spelling here. So if you could spell it so people can write it down.
Auticon.
Thank you. Okay, that answers two questions right, right there. Um, Johannes was asking, impact investing is very broad. It's a big tent. What is your particular focus for the future? And do you have any advice for impact investors of where should they be focusing their attention?
Obviously, my initial focus was development finance, which obviously was very much the work, the responsibility, and others do. Then I also moved more also into the agricultural space, which is this grassroots business fund from Washington, DC, and also Pimwimic as an example. And now I'm actually very much looking more at the environmental space and organizations that have direct links to produce products which are sustainable and which are, let's say, supporting the carbon neutral world that we want to create. And one of those companies is called Econext. It's based in Frankfurt, and we have a couple of interesting investments. One is a company called Autark, based in Leipzig. They produce roof tiles. You can have any roof tile you want, any color you want, etc. But these roof tiles are solar panels. So so you can actually clad your whole house with a normal looking roof tile, but this is a solar panel. And so obviously solar panels can look very ugly. And so I would like, when I build a new house, I would like to have roof tiles as solar panels on them, not these flat solar panels. Another company that Econex has is a solar panel recycling company, because obviously the average life time of a solar panel is about 8 to 10 years. And apparently in Germany, you've got big warehouses full of solar panels, and you can't just chuck them in a landfill. And there are now companies starting up to actually professionally recycle these. And I think this is great. And you get so much material out of a solar panel, which is just fascinating. They told us that when you let's say the first generation solar panels had much more high quality material in them. So when you recycle one of the older generation solar panels, you can rebuild 5 new solar panels out of that material, which is just amazing. And so that whole aspect of technology, creativity in regards of the environment, in regards of the carbon neutrality that we want to achieve, I think that is a wonderful new area for impact investors.
Okay, a couple of quick questions. The name of the roof tile solar panel company, if you have that, so we can put that out to the people listening. And then the other, I'm sorry.
It's called Autark, Autark, I think.
Thank you. And then Cameron had a question regarding the scale of the amount of money that needs to address the climate challenge of 7.1 trillion or even more. And he's asked, what opportunities do you see for a much more coordinated, active, globally between funders, academics, scientists, entrepreneurs, policymakers, in order to ensure that we are investing at the volume and velocity necessary to successfully address the change? I mean, you're working at a very high level. And have you found the secret sauce or the trigger to get all of this scaling up?
That's a question. That's a good question. It would be wonderful if I would have. No, I think there's some very interesting developments. We have an organization within the European Climate Foundation, which is called the New Economic Forum. And actually, yesterday and today, there's actually a big conference, a virtual conference, which the forum has organized. And I was listening into it this morning. And after this call, I will continue listening into it. And we had some very interesting speakers so far. Also, Laurence Toubiana, my CEO, spoke. And yesterday, and Pascal Lamy, who is also one of my board member colleagues, who used to be the head of the World Trade World Trade Association for many years, and he also was an EU commissioner. And we talked about many different things, and one of which obviously is transport. And we talked about, we had presentations about the car industry, we had presentations about the building industry, the real estate industry, the energy industry, etc. But what I found interesting, there was a suggestion made because one of the big issues in the e-mobility obviously is electricity, which has question marks. Is that the right way forward? Because obviously you have, where does the electricity come from? Is it, okay, it should be generated from renewable energy, etc. But the other thing is hydrogen. And obviously we are looking very much at the big truckers, the trucking companies, trucks, buses, etc. They should be powered by hydrogen. But hydrogen at this moment is still very limited in its production. And okay, Shell and also BP, they both are building refineries, actually both in Germany, for hydrogen. But then the question is that now green hydrogen or is it black hydrogen? Black hydrogen is actually that is powered, the energy that's used is basically fossil fuel energy. And obviously green hydrogen is then renewable energy. And that is obviously what we need. And the suggestion yesterday in that discussion was made, Europe should create a hydrogen corporation that combines all these aspects together, and there should be partly public and private partnerships. And then you really get going. And then they say, obviously, but if you really want to power the transport system in Europe with hydrogen, we don't have enough space in Europe to create enough renewable energy. So the suggestion there is that you build that you use North Africa as a source for renewable energy to power this massive hydrogen corporation that then produces hydrogen in North Africa, sourced by solar energy produced in North Africa. And then also you have to transport hydrogen into the markets where it's used. And I think that was a very interesting concept, which obviously in the next 5 to 10 years will and should be looked at. And so I think there are many interesting new, let's say, ideas coming on stream. And this was basically proposed by a professor from Mannheim University yesterday. And I thought it was very creative. And they're going to write a bigger paper on it and to see how viable something of this sort would be. So I think there are many opportunities in that space, and also employment opportunities. So when you look at people, how can you employ human capital better, and obviously people who come out of the car industry as engineers, etc. And you could retrain them in the battery technology, because battery technology for e-mobility and also hydrogen is obviously very key. And so I think there are lots of interesting opportunities coming on stream soon.
Diana had a question at a personal level. What drove your switch from conventional investment to impact investment within what is a wide field, and where particularly does your passion lie? Apart from being a musician, I know that you're an avid drummer, and you should definitely go listen to Stephen when his band performs. But what was the driver? What was the trigger to going from traditional investment? It was very early, 2002. That's pretty early.
But I was never an investor. I worked in retail, and obviously these are different skills. So I had to really learn that investment concept through my initial work with responsibility, and then getting involved with other companies and learning from others, learning by doing, and obviously making lots of mistakes, and then having some winners, and then gradually you build up your confidence, and that I think was that's how it worked. So, and I never worked in the investment industry, so I was just a very simple retailer and trying to sell as many goods that our customers wanted.
Gurminda had a question. He's saying Stephen has gone beyond social impact. How does he view the future of linking social impact investing with climate change initiatives and conscious investing, protecting nature, interspecies, the environment, and people's livelihood? It's quite a big ask.
Yeah, it's a big ask. I think again, it is a technology play, because I think we can really work in climate change through making very strategic investments in technology, and I think that is the key. And as I said before, technology that can help in the agricultural sector, but can also help in the infrastructure sector. So let's say water, etc., water treatment plants, etc., and stuff, and also technology that obviously we need oil. So oil is always will be a commodity that will always be there, but we don't need 100 million barrels a day. We probably need in the future probably let's say 30 million barrels a day, because so much of the industry is needs oil for those productions. You know, if you now look at all that let's say the facilities that we always hear now in the last couple of weeks, that our nurses and doctors don't have enough protective clothing, etc. So much of that protection is also has plastic in it, and which is all oil based. So I think we need it, but we should not burn it. And obviously, their technology again has a big play to make sure that we don't burn fossil fuels, that we use them very strategically and sustainably, and I think that will work. And there's so much creativity out there. Also, if you look at the textile and the fashion industry, what is happening there, you know, circular economy, I think there's so much new thinking out there, and that didn't stop. It doesn't stop now because of coronavirus. No, people are working at it. They're coming with creative solutions. So I think there's a lot positivity coming through.
Several questions from Veronique and Elsie regarding measurement. You probably get that question. That's probably it's being addressed also in your family office. Have you found a simple, idiot-proof way of being able to measure the impact of your investments?
Now, the simplest way that I always say is if you look at the impact that Orticon has, that you put people to work who are actually disabled, and because of the way that they work, the way that you treat them, they earn a normal salary, and they can really shine in the way that they work and in their productivity and their outputs. Obviously, I can just advise you the website of Responsibility, that they have a very interesting way of looking at impact. They have invested in the last 2 years over 1.5 billion into the finance of climate mitigation activities, and the way that they measure that impact is very, very fascinating. So I would like to recommend that as one way of looking at it. And obviously, many other organizations measure the impact on how much tax revenue have our businesses, let's say, generated in the countries that they operate in, etc., and how many people have been provided with jobs, etc., how many women do work in the organizations that we support, etc., and all these aspects. But I think so for me, the very simple one is the Orticon example, and which I think is a wonderful way of talking about impact.
Arvind actually he doesn't have a question. He just wants to give you a compliment. He says, being in impact for decades, I've never heard anyone spell out so clearly the credentials investors look for as you just did. You should publish a one-pager.
Thanks.
Because I mean, it's also very difficult, I'll be frank, to get impact investors or people from very successful I think it's a sixth generation family, to come and openly talk about what they're doing, why they're doing it, what are their drivers. So I'm very grateful that you've taken also the time out of that to share. We have way too many questions to be able to address in this 1 hour. We have 10 minutes actually remaining. One of the questions was, there was just this, I think today or yesterday, an article published that most of the Asian institutional investors are totally uninterested in ESG and impact investing, almost like 90%. So that I see as an opportunity. That's a lot of people to educate. You've traveled a lot in Asia. You probably know some Asia investment allocators. What do you think can work in Asia, or is it just, it's the farming approach, not the hunting approach?
I think, yeah, Robert, you and I were on this seminar in Hong Kong. Was it a year and a half ago? And obviously there we had a lot of impact investors, family offices there. And I think it was very, very beneficial to reach out to a lot of these people. And quite a few of those we are still meeting also in different scenarios like Tonic, etc. And the Global Impact Investing Network, etc. So I think the market is out there, definitely. And but obviously, the question is, where do you look? We have a business through participation. We have a business in Singapore, in the Philippines, and in Thailand, and very interesting. And they're working on payment systems, because in a lot of these countries, people are still paid. They don't have bank accounts, and so I think what we are trying to achieve there is actually to create a financial infrastructure method to get, let's say, people paid much more easier through having their own bank accounts. Obviously, you've got all this auto pay, or this mobile payment system, which is obviously fascinating. But obviously, we also have co-investors working with us there. I also met in Asia a very interesting investment funds, also based in the Philippines, and they do some fascinating investments there. And then they mainly raise their capital in the West. So it's not capital from Asia, but it's mainly capital from the West. So you meet them in London and you meet them in Zurich. And so I think more education is needed. We do, with the European Climate Foundation, we do a lot of work in Asia, because obviously we are very concerned about the Road and Belt Initiative of the Chinese government, which is sort of their Marshall Plan for infrastructure development and along the Silk Road. And our worry, we've got now people on the ground in Singapore, the same with the World Resources Institute, because we are working closely together to let's say, make governments and corporations and civil society aware that they should look at the downside of those investments that come from China. We don't want China to just export dirty fossil fuel industries into these markets. We want them to go immediately the next step to go invest into renewable energy, rather than build coal-fired power plants in Cambodia and in Thailand and Myanmar, etc. No, that's not what we want. We want them to go in there and to invest into renewable energy facilities. So I think that goes hand in hand, to my mind, with impact investing, because obviously you could create a system where actually you get the private impact investors involved in those areas, which I think would be very beneficial.
I hear this the story that the Asians are not interested, and Europeans are very interested. But people have to remember that when we started 25 years ago, there were very few people interested at all. And I still remember this. I gave a talk at the Dutch insurance industry on climate risk, and I said to them, "You're a country below sea level. Sea levels are going to rise. I would be concerned." And you know what they said to me? He says, "It's not a problem for us if sea level rises. We don't cover saltwater damage." So you can get very upset about the answer, But that's where that level of awareness was. And I said, that's true, but you give mortgages. So if 200,000 homes are underwater, you have a big financial loss. So the fact that Asia is where it is doesn't mean that it will stay there. I remember when Sam and I were doing a roadshow, one family office wanted to visit us. We never knew who they were. So we go visit them and we open up the door and they say, coal, oil, gas trading. That's what the business was. But they wanted to get away from that. And they wanted to move much more into the impact space. So they wanted to learn. So it doesn't bother me that, people are less reluctant. We're used to the irresponsible investors and criminals, the Donald Trump types, the people that are not there yet. That's okay. And I agree with you that it's very much an educational issue. We're coming close to the end of the hour, and I was very respectful of your time. What can this audience do? Because it'll also be, we're taping this, so everybody will be able to access it, throughout the year. What can they do to help you? I know that people always think that you have to help them. No, what can we do to help you achieve your goals of institutionalizing impact investing and getting climate at the very top of mind for everyone?
I think I would say we all have to look at our own behavior in regards of our own footprint, the way that we work, the way that we act. And because we all know that the way that we used to work, used to act, suddenly came to an incredible halt. And I think it's important to understand how can we all make a change, that we say, now we'll become much more conscientious about the way that we live, to not only protect the environment around us, because we see how quickly the environment is re-establishing itself, but also how we protect ourselves and our loved ones in the way going forward. And I think we have to set an example that we change. And I think, Robert, that you do these webinars, I think this is amazing, because that we are able to reach out to so many people through this medium shows us it can be done, and it will be done, and that potentially could become the new normal. I understand that we need to be very careful that we not just hide behind that new normal, because we need to be able to meet with people, talk to people. I listened to a very interesting podcast earlier this week of Father David Neuhaus, who is a Jewish-born Jesuit priest living in Tel Aviv. And he said, this new normal for us in Israel is just incredible. The middle and the upper class, they are very well set up for this. But the lower class, this is where we have to act, because these are the people who are suffering, and these are the people who are really affected by this. And he says, he as a Catholic priest living in Israel, he says, we are working with the people down there where they really suffer. But he says his problem also is that the churches are empty. And he says, is that the new normal, that now everybody gets church service live streamed at home, etc., and becomes very comfortable because you sit in your own home? He says, we need that community. We need that community to work together. And I think that is very interesting to see how, on the one hand, we are getting very used to that new normal, but on the other hand, we have to also reach out to each other and to make sure that we understand each other, that we can see each other in the eyes, and that we can actually also feel what the emotions are. And that is difficult to do that through this medium. But I think, so for me, the main area would be, we have to all look at each other's, at our own behavior in this area, and I think then we'll make it work. We definitely make it work, and so I'm quite positive. I think there's so much positivity around and so much energy around. And I think in 5 years we look back and said, God, wow, what did we learn in those 6 months of a lockdown? This changed our world, changed our way we worked, and made this world a better place.
Stephen, thank you so much for being, as my father would say, such a mensch, a man of honor. So I'm very grateful for your time. I'm very grateful for everyone who's still here adding questions. We will post this this webinar online shortly. You'll get notification of that. Next week, our next webinar will be with Luca Rancilio, whose grandfather invented the espresso machine and transitioned to an impact investor family office. For those of you that are getting value out of this webinar, please support TBLI Foundation to help underwrite the cost of this. So go to tbli.org and just make a small donation. There's lots of ways you can do that. This will help us and give us the fuel to continue to roll the stone up the hill and do this heavy work. I want to thank you again, Stephen. I really appreciate your time, and please let us know when your band is going to be performing again. Thank you all.
Thank you so much. Stay well.
Stay well. So we'll close off now with our theme song.